and a very, very cold Tuesday to everyone tuning in. It is January 27th, 2026, and wow, if you are anywhere in the United States right now, I probably don't need to tell you to grab a blanket. It is absolutely freezing. I hope you have a hot coffee in hand, maybe two, because we have a massive story to get into today.
It certainly is a day for hot coffee, though with the way the markets are moving, that coffee might be the cheapest thing you buy all week.
Ain't that the truth? So look, we aren't just here to talk about the weather. We're here to talk about why the weather just kind of broke the energy market. Because while everyone was shivering, natural gas prices completely exploded. I mean, we saw them jump from around $3 to over $6 in days.
Is a historic move, and frankly, a violent one.
Right. So our mission today is to unpack this. We're going to figure out why a winter storm named Fern is causing all this chaos, what a freeze-off actually is, and later get into some really scary trader talk. But first, let's just set the scene. Why is it so incredibly cold?
Well, to understand the market panic, you have to understand the catalyst. We're in the grip of Winter Storm Fern. But storm almost feels, I don't know, too simple. This is more like an atmospheric collapse.
A collapse? That sounds ominous.
It is. Meteorologists call it a sudden stratospheric warming event.
Okay, hold on. Warming. It's minus 20 outside. How does warming make it cold?
It's really counterintuitive, right? So think of the polar vortex as a corral. It's a fence made of high-speed winds that keeps all that super cold Arctic air trapped up at the North Pole.
Where it belongs.
Exactly. But when a sudden stratospheric warming event happens, the temperature way up in the atmosphere spikes. And that acts like a bulldozer crashing through the fence.
So the fence just breaks.
The fence breaks, the vortex collapses, and all that freezing air,
it
just spills out. And this week, it decided to dump itself right on top of the United States. We're seeing temperatures 15, even 30 degrees Fahrenheit below normal. I saw reports that wind chills in Chicago hit minus 35.
Minus 35? That is physically painful.
It is. And naturally, when it gets that cold, what does everyone do?
Crank the thermostat. My heat has been running nonstop for 48 hours.
You and 300 million other people. Total U.S. heating demand hit projected record levels. Something like 156 billion cubic feet per day. A staggering amount of energy.
But here's the part I don't get. We have satellites, we have supercomputers, we know winter happens. Why was the market so caught off guard by this?
That is the billion-dollar question. And the answer is, complacency.
Complacency.
Pure and simple. Think back just 2 weeks ago. Until mid-January, this winter was incredibly mild. We were in a La Niña pattern, keeping things warm. Because of that, our gas storage levels were sitting pretty, about 6.1% above the 5-year average as of January 16th.
So we had plenty of gas. We were comfortable.
We were too comfortable. The market looked at those full storage tanks and basically said, winter is canceled. Traders piled into short positions. They were betting heavily that the price would keep dropping.
You were betting it would never get cold.
And then the fence broke. When that forecast flipped, everyone who was betting on cheap gas suddenly realized they were on the wrong side of the trade. And they all rushed for the exit at the exact same time.
It's like a crowded theater where someone yells, "Fire!" but the door is only big enough for one person.
Precisely. And that panic buying drove the price from $3 to $6. But that's only half the story. Because usually when prices go up, producers just, pump more gas.
Supply and demand, price goes up, supply goes up.
Usually. But this time, supply didn't go up, it crashed. And that brings us to the freeze-offs.
Yeah, I've been seeing that term everywhere. I just assumed it meant the workers were too cold to go outside.
It's a bit more technical. It's not just about the cold, it's about where the cold went. This Arctic blast reached deep into Texas, into the Permian Basin, and over into Louisiana's Haynesville Shale.
Okay, so places not known for dealing with sub-zero temperatures.
Exactly. A gas well in North Dakota is built for winter. But in West Texas, a lot of that equipment is exposed. So when the temperature drops this low, you get a phenomenon called the Joule-Thomson effect.
Oh boy, physics class. Keep it simple for me.
Okay, think about a can of spray paint. When you spray it for a while, what happens to the can?
It gets freezing cold.
Right, because the gas inside is expanding and cooling down. Now imagine a natural gas well. You have high-pressure gas rushing through a valve already cooling itself down.
What will you?
Now at an outside temperature of, say, 10 degrees, the pipe is freezing from the outside, and the gas is freezing it from the inside. Any tiny bit of water in that gas stream instantly turns into an ice block.
And it plugs the pipe?
Instantly. Chokes the flow completely. And it's not one well, it's thousands of them. In mid-January, the U.S. was producing a record 110 BCF a day. By Sunday, that had plummeted to a two-year low of about 92.6 BCF,
Wow, so let me do the math. That's a loss of almost 18 BCF a day.
roughly 17.4 BCFs per day, just wiped out. To give you some scale, that's more than the entire daily consumption of the United Kingdom.
That is wild. So at the exact moment demand is at a record high, supply physically freezes shut and hits a two-year low.
Correct. It is the definition of a supply shock. And when you combine that with a financial market that was betting the other way, you get fireworks.
Which brings us back to the traders. I heard a term thrown around this morning that sounded terrifying. People were talking about a widowmaker.
Ah, yes. The widowmaker.
It sounds like a wrestling move or a heart attack.
In the financial world, it's a bit of both. But to understand it, we have to look at the calendar. Today is Tuesday the 27th. The futures contract for February natural gas expires tomorrow.
So tomorrow is the deadline?
It's the final bell. If you're a trader who sold a contract promised to deliver gas at, say, $3.50, you were in a nightmare. The price is $6. You were losing a massive amount of money.
So you have to buy it back.
You have to buy it back immediately to stop the bleeding. This is what we call a short squeeze. Everyone is forced to buy at any price just to survive.
So the panic just feeds on itself.
It does. But the widowmaker refers to a specific spread. It's the difference in price between the contract expiring now, February, and the one for next month, March.
Okay, so Feb versus March. What's the difference?
It is massive. The February contract is trading over $6. The March contract is trading near $3.90.
Wait, what? That's a huge gap. Why is March so much cheaper?
Because the market believes this is a temporary crisis. They think the cold will break by March. But for right now, it is pure panic. That gap between Feb and March, that is the widowmaker.
Why do they call it that?
Because betting on it has destroyed careers.
Yeah.
Traders think, oh, this gap is too big, surely it will close, so they bet against it. Then the weather gets a little colder, the gap widens, and they get a margin call that wipes them out. It has literally bankrupted hedge funds.
And I imagine the liquidity, the number of people actually trading is pretty thin right now.
It's a ghost town. The open interest for February was under 25,000 contracts. For March, it's 340,000. So you have this tiny market being whipped around by a massive storm. The waves get messy.
It really puts into perspective how fragile the financial side is. You know, before we get into the power grid, because I know things are getting tight in Texas again, I want to take a quick second to chat with you, the listener. If you're enjoying this deep dive, we invite you to subscribe to the channel, leave a like, and drop a comment letting us know what topics you want us to cover next. We really do read all of them. Also, if you look in the episode description, you'll find a PayPal link. If you want to support this project, your contribution helps us keep the lights on, which is apparently getting more expensive. We don't ask for more than the cost of a coffee. Thank you for your support. It really keeps us going.
Absolutely. We appreciate it.
Okay, so let's get back to the physical world. Frozen wells, panicked traders. Are we going to run out of gas? Like literally run out?
That is the fear. But we need to distinguish between two things, inventory and deliverability.
Break that down for me.
Okay. Inventory is what we have in the bank. We have over 3,000 BCS of gas sitting in storage caverns. We aren't going to run out of total gas. We have plenty in the vault.
Okay, that's good news.
But deliverability is how fast you can get cash out of the ATM.
I see where this is going.
You might have $1 million in the vault, but if the ATM only lets you withdraw $500 a day, you have a problem. Storage facilities have physical speed limits. They can only push gas out so fast.
And right now we are hitting that speed limit.
We are crashing into it. Data from Wood Mackenzie shows that in several regions, demand is actually exceeding the maximum daily withdrawal capacity. We physically can't get the gas out of the ground fast enough.
So what happens then?
Pipeline pressure drops. And if it drops too low, gas stops flowing to homes. To prevent that, grid operators have to start cutting power.
Which brings us to the electric grid. How is Texas holding up? Because I remember 2021.
It is a major stress test. ERCOT, the Texas grid operator, is forecasting a record winter demand of 86 gigawatts. That actually beats their all-time record from the heat wave of August 2023.
That's insane. A winter record beating a summer record in Texas.
It shows how much we've electrified. And it's not just Texas. Look at PJM in the East. They've triggered demand response programs.
That's the polite way of saying paying factories to shut down, right?
Exactly. They are paying large industrial customers to turn off their machines right now so we can keep the lights on for residential homes. It's a desperate measure.
And I'm guessing solar and wind aren't helping much in this storm.
Not really. Panels are covered in snow, and sometimes these cold fronts are very still so the turbines don't spin. So just when we need power most, renewables underperform, forcing us to burn more gas. It's a vicious cycle.
The system is stretched to its absolute limit. And this isn't just an American problem, is it? Does a frozen pipe in Texas matter to someone in Tokyo?
It matters more than you'd think. In the last few years, the U.S. has become the world's swing producer of LNG, liquefied natural gas. We send it all over the world.
Right, from terminals in Louisiana.
Well, right now, those aren't filling up as fast. Because the pipes are frozen, the flow of gas to the export terminals has dropped to its lowest level in a year.
So we're slowing down deliveries to the rest of the world.
Significantly, which tightens supply in Europe and Asia. But there's also an economic force here called arbitrage.
Profiting from the price difference, right?
Yes. Usually, U.S. gas is cheap, say $3. Gas in Europe is expensive, maybe $12. So you buy here and ship it. But when the U.S. price explodes to $6, that profit margin shrinks.
So it stops making financial sense to send it away.
Exactly. And if prices here hit double digits, we'd likely see cargo cancellations. The gas would stay here because we need it more. We brushed against that wall this week.
This feels like a preview of the future.
I'm glad you brought that up, because this isn't just about one storm.
Right, because demand is growing.
It's exploding. We're in 2026. Think about the new AI data centers.
They use an absurd amount of power.
Massive amounts.
Yeah.
And they run 24/7. Then add millions of electric vehicles charging overnight. Our baseline demand for electricity, and therefore gas, is higher than it's ever been.
So our buffer, our margin for error is smaller.
Exactly. 5 years ago, we might have handled this storm without a price crisis. But today, the grid is already running hot just to feed the AI boom. When you add a weather event on top,
Yeah.
you get a crisis.
It's like the system is a coiled spring. You poke it with a storm and it snaps.
Perfect analogy. Which brings us to the outlook. Is $6 gas the new normal?
Please say no.
The consensus is likely not. This is a spike, not a plateau.
Why?
2 reasons. First, physics. As soon as it thaws, that 17 BCF of production will come roaring back online pretty quickly.
So the supply shock is temporary.
Yes. And second, the weather models are shifting. NOAA predicts that this La Nina pattern is weakening. Milder air is expected to return in February.
So the panic should subside.
In the short term, yes. This is a temporary squeeze. As the February contract expires and the weather warms up, prices should drift back down.
But the volatility.
The volatility is here to stay. With AI demand and export demand, we're operating with a razor-thin margin for error. We should expect more of these violent spikes.
Well, that's a sobering thought. Let's recap. We had a sudden stratospheric warming event that broke the polar vortex. That cold froze the infrastructure in Texas, causing a massive supply shock.
Right, and that slammed into a financial market that was complacent and short, triggering a widowmaker squeeze.
And under it all is a grid stressed by new demand, leaving us with very little room for error.
It was the perfect storm, in every sense of the word.
It really was. And with that, we reach the end of today's deep dive. We hope you liked it, learned something new, and that you'll join us for the next one.
Stay warm out there.
And hey, a quick reminder, the link to our PayPal is in the description if you want to help us out. We really appreciate every single contribution. Thank you once again.
Thanks, everyone.
We'll meet again very soon. Cheers.
Just one final thought. We survived this squeeze, mostly. But we're building more data centers every month. Are our grids actually ready for the next winter storm, Fern, when we don't have a storage surplus to start with? Something.